What's up, mortgage coach community? Dave Savage. I am coming to you live out of Snowbird, Utah. And this place is amazing. Josh, you and Drake live in such an amazing state. It's just the beauty is unbelievable.
You're only one ski resort down from Drake's favorite ski resort. So he knows that place like the back of his hand.
Alta? You're an Alta guy?
Yeah.
Yeah. I grew up in Colorado, but I always am just jealous of the quality of your snow here. But today the snow is not, quite. Or I mean, I think Colorado might beat you guys today. Anyways, so mortgage coach community. Anyone listening to this, Josh Mettle well. He is, the guy who really coined that phrase, the mortgage strategy, or the best mortgage strategy always beats the lowest rate. And he's brought a lot of great thought leadership to the mortgage coach community around being an advisor and about changing the game from loan officer to advisor. I had Drake on a call. It was last week. Drake, you were on the mastermind call, right?
I believe so.
And that was, while I've met you a few times over the years, that was the first time where I get to interview you. And I got to hear a little preview of this story. And this story is special, guys. It's special because one, there was generational wealth created from mortgage advice because this family talked to someone who wasn't a loan officer. And by the way, when you hear the whole story, they did talk to a loan officer, and they were thinking about doing a loan with a loan officer at a big bank. And because Drake is trained, because he's a grandmaster and mortgage coach, because he asked the right questions and he put forth the right strategy, generational wealth could be created if the family follows the plan. So Josh called me because he heard the story, he heard the strategy. He's like, Dave, we're both change agents in this industry. We want to see more loan officers graduate to another level. And he goes, this is an important story, an important strategy, and let's do a call together. I'm like, of course. So that's the frame for today's call. I tell you this because I want you guys to hear from Josh now. I'm going to hand over the leadership reins, and he's going to interview Drake. I will pop in from time to time, just put a little Mr. Mortgage Coach feedback on it. I also want to remind you guys, this is a mastermind. So if you're watching this live in our Facebook group right now, ask questions. We'll get to them. If you're watching this recorded in our YouTube channel, what was your biggest takeaway? If you have a question, we would love to hear it because, everybody on this call has a passion for delivering advice, not price. So Josh, take it away, my brother.
Thanks, Dave. Drake and I, over the last 10 years, Drake is a grand master when it comes to creating TCAs. In fact, I don't know anybody personally who gets as detailed and analytical and creative on how to leverage someone's equity or cash flow that they can create out of a restructuring their mortgage into a strategy that builds wealth. And he is just an absolute ninja at that. This story was particularly compelling because the client came in as I'm going to let Drake tell the full story, but the client came in with a preconceived notion of what they wanted. And by the end of the transaction, at the end of the education that Drake was able to share with them, he completely shifted their direction, created multi-seven figures of wealth for them with this new strategy, and was able to solidify a financial advisor. So all those things are great. But when Drake was originally describing it, what was so impactful to me, and I literally was listening to him and I felt, so emotional about the journey that he took these clients through that I was choked up. I was literally almost crying. I was like, man, this is like what we freaking exist to do as mortgage advisors. You've just hit a grand slam home run. And he was able to change the entire financial trajectory of this family. So Drake, I'm going to turn it over to you, buddy. Tell me, I really want to understand just a little bit about this family and what their situation was, and then, how they came to you, and then just unravel the story from there, if you would.
Yeah. So this family is a young family. The main borrower is a physician and anesthesiologist. They're based in Texas, and they have a little 6-year-old boy. I helped them buy a home in 2018. And so, come late 2021, they had picked up a bunch of equity because they bought at a good time. And sort of heard that rates were low. And so, I think they just, out of sort of habit and familiarity, they reached out to their sort of main bank and asked about lowering their interest rate. They also, because we had done a good job in our CRM of continuing to stay in touch with them, they also reached out for a competitive quote from me. So they came into it saying, hey, my bank's got me this quote, of course, the PDF on the fees worksheet, right? Classic bank and large company LO presentation, just a simple PDF.
Yeah.
And it was a pretty competitive rate for the time. They were trying to get below 3% was kind of their goal, and their goal is just, we want to lower our payment and save some money on a mortgage. So
can I point out just two quick things, Drake?
And I want to insert something too. You go, Josh, and then I want to pull something out of what he said.
Yeah, I think one thing that's important is you've got a proactive CRM working in the background for you, so that when we say we're going to be a lender for life, that doesn't mean we send a postcard. That means that we actually have some sort of prompt to reach out to that client proactively. And I believe, if I remember the story, that was probably a prompt that originated out of Sales Boomerang that alerted us there was something that happened, and that's what kind of prompted the CRM to take action and reach out. Is that correct?
I believe that there was a Sales Boomerang prompt. Yes.
The reason why I think that's so important is because if we really want to create change in the lives of our clients, then we have to have some sort of a automated intelligence, some sort of artificial intelligence, some sort of AI that's running in the background, watching our database, that's alerting us as mortgage advisors that, hey, it's time to reach out to this family. And I think the tools that we need to stay in communication and be aware when this family needs us to step back into their lives is Sales Boomerang, and it is a great CRM. And in tandem, you got the opportunity that otherwise they would have just got a low rate. So that was the first thing I wanted to point out. Second thing I want to point out is families always believe that the lowest interest rate is the path to creating wealth. And it's our job as mortgage advisors to hear them and then validate, what they're after. Got it. Okay, that could be a valuable path. Allow me to ask you a few questions and then go deeper to unravel what else we can do to create wealth for them. So those are the two things I wanted to point out. Dave, did you want to say something else?
Well, you called out the coaching note. I wanted everybody to be aware that, that was Sales Boomerang, and I'm wearing the Sales Boomerang shirt right now. I didn't actually remember that was going to come out of this interview, but I'm at an event and the Boomerang team was wearing mortgage coach shirts yesterday, so I wore theirs today. But the ethos behind Sales Boomerang is no borrower left behind. And there's a couple different dynamics of that vision and that mission that we have, especially now that we're strategically aligned from an ownership perspective because of our deal with LLR partners. But we know more than what families know. And between the data that we have with Boomerang and between the analytical advice engine that we have with Mortgage Coach, we can create opportunities for the consumer and we can create opportunities for the loan officer. So, what you experienced was a 1.0 experience. You had it in your CRM. You probably got a credit inquiry alert. 2.0 is that Mortgage Coach is already created. And in 3.0, which we're working on, guys, will be a 101 version. It may not be Drake, hey, I interviewed the family, I found out some more information, but there could be this 3.0 total cost analysis that the machine creates. So I just want to emphasize, guys, where the puck is going if you are a mortgage coach. And that doesn't mean just paying for it. That means knowing how to use it, knowing how to ask questions. And you are a Sales Boomerang client, data, alerts, intelligence, advice, presentation, back and forth. So I just wanted to call that out because I think it's very important to anyone listening to this today. Keep going, Drake.
Nailed it.
Yeah. So when she told me, hey, I've reached out to my bank and I've gotten some numbers for them and I just want to compare with you, I just go immediately into questions mode, right? Let's dig deep here and figure out what's going on with this family and where the opportunities are for them. from a sales perspective, right, that's how you compete, but also just that's what we do anyways. I think we talked on the last call, Dave, about how these financial questions are built into our CRM. So we kind of have a template to work off of. And so I just started digging into those questions right away because I knew that was going to be where the gold mine was for them.
Hey, Drake, I want to ask you a question. It didn't come to mind when I interviewed you last week, but I noticed you had those strategic questions that helped you go, beyond the transaction, hopes, dreams, goals for the family. I'm curious, in the CRM, do you guys also have a question for after you close the loan, what's the next goal? So that you're already kind of vision casting. If the family's like, oh, I want to pay off the MI and buy a bigger home, or, oh, I want to buy a second home in 2 years. Are you in your CRM asking questions that you could track and you can use for that next transaction? Is that something you guys are doing?
Yeah, like one of the questions is, are you thinking about any large upgrades to your real estate?
Can you share your screen real quick, Drake, and just show him the questions built right into the CRM?
I think that I can.
Cool. Well, I'm glad I asked you this time because, guys, that's another thing. I want everyone listening to this, to be an advisor, it's beyond the transaction. And to be a client for life mortgage professional, it starts with the first time you meet with the family and the questions you ask, the advice you give. But if you want to be a client for life loan officer, you got to be doing annual reviews, and you need to be getting alerts so that you know when it's time for a family. And if you don't have those in your CRM and you don't have a boomerang and you don't have a mortgage coach, I will be as bold to say you are not a client for life loan officer. You may be a great loan officer, but you're not optimizing your client for life experience. So thank you for showing this, Drake.
Did I get the right screen? Can you guys see?
Yeah, you got it.
Yeah, you killed it.
So these are Nero experience questions. And just to show you the automation, the drop down is there. If you, for some reason, are having to move quick and can't get to these questions, we created a survey that shoots these questions out to the client as an email, and then hopefully they fill it out and send it back so we can have the conversation later. But I had marked yes. And so, yeah, any financial concerns we can help you address, but specifically regarding what you were mentioning, like forward looking, are you thinking about any large upgrades to your real estate? Are you interested in growing your wealth through real estate? Those sorts of things. What do you want in the future, right? So yeah, there are forward-looking questions in there as well.
And you've got the retirement age in there, Drake, which is fantastic. You've hit on umbrella insurance. You currently have a trust or will. Do you currently have a budget and a savings plan? Do you have an emergency fund? Are you taking steps to maximize your tax benefits? So, I'm just thinking of myself going through this experience with Drake. And by the end of these questions, they're like, what is going on? This is very different than what was happening when I called my bank and they said, oh, hold on a second. Let me find my rate sheet. Oh yeah. Okay. Your rate is going to be X. I'll email that over, right? Like right away, they know that they're dealing with someone that has a consultative approach. So great. Keep going, brother.
Yeah. Every time I go through these, people are just like, wow, nobody else has asked any of these questions before. So yeah, we started digging into this stuff, right? And you can see, right, they had no goal for retirement, no particular plan in place. And one of the questions that we should actually add to this is, do you have a CPA? Do you have a financial planner? I just asked those out of habit, and these folks did not have one. And they're, pretty high income folks, and are going to have a lot of investable income going forward. So yeah, the goal is, and like we talked about on that call last week, Dave, with Alex, I really liked how he put it. His job, and I think about it this way too, he put it very well. He feels like his job is to open the client's mind. And that's, it's kind of that challenger sale mentality, where they think they want one thing, but, through educating and sort of the Socratic method, just asking questions and opening their mind to different possibilities that they never considered before. So that's kind of where I was trying to go with this. So we went through all these questions, and it came up that, even in just this very first question, they took 2 consumer loans they had out there. One they had used to build a pool at their home, and the other he had purchased, used to buy into his medical practice. So, $180,000 in essentially signature loans that were out there at pretty high interest rates. The pool loan was at, I think, 7 3/4, and the practice loan was at 5.5. So I'm immediately thinking, okay, great, great. We can lower your rate here, but what's going to be way more powerful is if we're knocking out those huge consumer debts and playing with those, pulling those levers instead. Does that make sense? Did I explain that okay?
You did, and actually stop sharing the screen. Let's what you're saying is so good, and I want to make sure people see you now and then. When you have something to show on your screen, share it again.
Let me get back to it. Sorry, it's going to take me a second.
Yeah, and actually, I could just pull it back from you.
Thank you.
I didn't think of that, but I have admin privileges. All right, we'll show the TCA. By the way, the folks who are watching us live on Facebook, you asked for one of these. We'll show this to you in a minute. I'm going to put a link in chat for you guys so you can just follow along in comments. And if you're watching this on YouTube, we'll have a link to this TCA powered by a sales boomerang alert. That's what I'm going to call it. I know the sales boomerang team's going to love that. So check it out. It'll be in notes, but you're killing it. Keep it going.
Did you have a comment, Josh? It looked like maybe you had a question or comment.
I was just going to simply point out that if you didn't pause long enough to dig, and there's always that moment when we start asking those questions that are beyond our perceived comfort zone. We all, as a loan officer, I kind of have this space that I'm comfortable playing in. And there's an air of bravery that is required to go past the boundary of what a loan officer normally has permission to ask questions. So we talk a lot about having a script for that, because if you're feeling uncomfortable asking the questions, they likely are feeling uncomfortable as well. And you'll notice that Drake, I believe, inferred to this. He said, hey, do you mind if I ask you a few more questions that are a little out of the ordinary? You may not have had a loan officer in the past ask you these questions, but for me, making sure that I prescribe the right mortgage solution is the most important thing. And I actually need to learn just a little bit more about you and where you're going before I can prescribe the best option for you. Do you mind if I ask a few more questions? Something like that gets permission to go a little deeper. And then once they say, absolutely, then you can get into these things. And that's what really uncovers the opportunity for us to give really great advice.
Sure. And I'm going to come back to this recording and watch what you just said again, because I want to tighten up my scripting a little bit better on that. But yeah, I mean, basically, and sometimes
you don't need to do that, by the way. We will have this in the YouTube channel. Okay. And I was actually going to come in and interrupt and go script alert. But guys, I will have that in my next presentation, because that was just such a simple, clean 20-second transition. Stay tuned, everybody.
Yeah, and sometimes I'll get to these with a new client, and I still have a little bit of reticence going into these questions, but I kind of lean into it and say, all right, we got to do it every time. We got to do it. So
good for you, brother.
Something to keep in mind. It's not easy, and it's not automatic for anybody. So just for those out there that aren't doing this yet, that are thinking about doing it.
Be brave. Be brave.
So yeah, we dug down deep, and I said, look, we need to consider paying these 2 consumer loans off. You're paying way too much interest on these. We can knock out a lot of this debt, because I started pulling up HomeBot and looking at their equity and seeing where their home value was. It had gone up a bunch, and so I said, I think you have enough equity in here that we can maybe knock some of these out, lower these rates, and especially with physicians and sort of higher educated people. I'm also always thinking about student loans. Like, how can we get those student loans knocked out faster, because they're not tax deductible, often at higher rates. We can open up cash flow on a monthly basis to either invest at higher rates of return, or put back into the mortgage, or pay off other debts. So
Yep.
that's what we ended up doing in this case, because they had enough equity to pay off the approximately $90,000 pool loan, we'll call it, which was at 7.75%. And I think that payment was roughly $1,000 a month. And so we said, okay, here's what we're going to do. This is how my thought process was building this. We're going to take the savings from the pool loan, which I think it was just under $1,000, $984 or something like that. We're going to cash out and eliminate that from your monthly debt obligation. We're then going to take that $984 a month. We're going to take it and throw it at your practice loan, which is at 5.5%. So we're going to accelerate that practice loan. And the practice loan payment was somewhere on the order, it's several $1,000s, like $3,000 a month. Let me see if I have it in here. It was $3,900 a month for the practice loan. So, and the pool loan was $940 a month. I have it in here in the pay off my debts tab in the TCA. So we pay off the student loan, eliminate that, the pool loan, eliminate that $940 payment, start throwing it at the practice loan. That paid off, and I went outside a mortgage coach to calculate this. There's probably a way in there to do it, but I said, if we take $940 a month and add it to where this $100,000 practice loan is, how much faster are we going to pay it off? And I think it was like 5 or 6 months, which it doesn't sound like that much, but when it's a $4,000 a month payment, it ended up being $20,000 in payments that it was going to erase for them. So that was a big savings as well.
Yeah.
So then what I did is I said, okay, now once those are both paid off, we've now freed up $4,900 a month in cash flow per month based on what they're paying now. I said, now let's take that money, and we're going to give it and invest it and show you what that's going to look like over 30 years.
Great. And can you show that on your TCA as well?
Yes. Do you want me to
give me a second before you share. And I want to cover a few things, guys. One, he's got the skill. He's got the heart of an advisor. Two, he's got the tools. He's got Mortgage Coach. He's got Sales Boomerang. He's got HomeBot. So there's a mindset. There's a skill in using these things. There are these tools, and then guys, he's a leader. He's leading families.
Yeah.
He's leading teams. He's got a team. And hey, even if you're a brand new loan officer, listen to this. You've got a team. You've got your mentor. He's on your team. You've got your processor. They're on your team. Until you get to that point where you can really start building the team. But here's the deal, guys. There's a lot of team loan officers out there, and you cannot be a client for life loan officer if you don't have the tools, you don't have the skills and the tactics. So I just wanted you to, again, CRM is part of that toolkit. So I just wanted to call out the man and machine in the leadership, kind of like 3 categories of excellence that, guys, and this is not a one-off thing. While this was a great teachable experience with a lot of wealth created, this is not a one-off thing. This happens weekly in Josh and Drake land. People that are black belts at Mortgage Coach, this is how we roll, where we're not doing loans, we're changing lives. So anyways, let's share the TCA. And now, and also guys, so alert, questions, used HomeBot for data. And now we're going to give a presentation with a Mortgage Coach total cost analysis. Let's check it out.
TCA up?
Gotcha.
Okay. So yeah, what I showed first of all was their current loan, of course, but this includes both the pool and the practice loan in this.
Got it.
The next option, as I said, I gave them what they asked for first, and I tried to be as competitive as I could, just to be in the game with the bank in case that they fell backwards and I couldn't open their minds, so to speak. So this is a 30-year fixed rate in terms. We were going to save them $800, which is a lot of money, right? It would be, you wouldn't be hurting yourself by doing that, put it that way. The next option, I said, okay, well, what if we go ahead and pay off that $90,000 pool loan, and then we take the savings and we throw them at the new mortgage, and it just accelerate your new mortgage, right?
Yep.
So in other words, we're eliminating $900 a month. We're lowering the monthly payment, and we're going to take that, add it to the new mortgage payment. So your same out of pocket, your out of pocket is the same. What does that do? Well, that pays off your loan 4 years, your mortgage 4 years faster with the exact same out of pocket you have today. So that would be another way to do it. The next option I said, third from left, is take the $90,000, pay off the pool loan, and then take that money monthly and invest it with your financial advisor, which they didn't have at the time. But we modeled that, as you can see, we did the net worth in 30 years down here, which I try to use this portion of Mortgage Coach as much as possible, because that's what I'm really trying to do, is help them grow their net worth. So we showed that here.
Hey, Jake, hey, Drake, can I jump in real quick? Stay on that. So guys, this is where the game is changed. Every loan officer in America is focusing on rate, payment, and cash to close. And Drake is trying to get to that freedom point. That's the business he's in, is helping families get to freedom points. I can't remember the quote you said, but that's his why. It's not closing loans, it's accelerating the freedom point for families. Super powerful, bro. Keep it going.
So yeah, I came in here into the reinvestment strategy to show you guys, so what I said was, all right, we're going to free up $1,000 a month. We're going to invest that at a rate of return of 6%, and that gives you $1 million in 30 years.
Powerful.
So that's also a good strategy, right? But the real home run, obviously, is the fourth option, which is we take the $90,000 out to pay off the pool, then accelerate the pool loan. Accelerate the practice loan. When that's paid off, I figured out that would be 23 months. Let me see if I can show that. Where did I put that? I think it's here, custom. Sorry, I think it's,
that's okay.
Here we go, custom. So after month 23, this is in the reinvestment page, we throw $4,900 a month, because we've now paid off the practice loan and the pool loan. Same out of pocket that they have today. By doing that, in 30 years, they've got $4.3 million that they can do with whatever they want.
Wow.
That's at a 6% rate of return. Historical return of the S&P is closer to 10.
So Jake, if I could, I just want to put a bow on this, and then I'd love you to tell how this ended up with the relationship, with creating the relationship with the financial advisor. Will you bring down your screen for just a second, and then let's talk through that. What I find humans have a really hard time doing is thinking decades into the future. They can think about a lower interest rate equals a lower payment next month. That's easy for them to comprehend. Peter Diamandis talks a lot about humans having a hard time thinking exponentially. They can think out 2 or 3 steps, but when you think exponentially, which is what happens when we have compound interest, right? You freed up $4,300 a month, which is going to compound at 6% over 30 years until they reach their age 65. Their brain can't figure out, oh, that's $4.3 million that I could create with the same number of dollars that are leaving my checking account now. I'm just redirecting where that cash flow is going. I'm paying off the pool loan. Then I'm going to cascade that extra cash flow towards paying off the practice loan. Then I'm going to cascade all that extra cash flow towards investments. And 30 years later, I have an $8 million wealth. I have $4 million more in wealth, because I also have a free and clear home. And so our job here is, 1, to ask better questions, 2, to be brave and to ask those questions that feel uncomfortable. Like, do you have a financial advisor and a financial plan? No. Do you have debts? Yes, those are both very uncomfortable questions because the person on the other side of the phone, they didn't want to answer that question. They've got shame around or embarrassment around where they are. So one, we have to ask the questions. We have to be brave enough to ask the hard questions. And then the third thing we have to do is we have to help them think exponentially. We have to help them think in terms of this strategy over 30 years gets you way farther than just saving the $800 a month. And so that's the beauty of mortgage coaches, that you can help somebody think exponentially decades into the future.
So I want to try to put this into as close to a class, courseware for you guys about what's going on here. And the three essentials to a smart mortgage decision are: one, options. So number one, you have to give family options, or you're not giving mortgage advice. Number two, you need to do it, the cost, you need to show the cost over different time frames: monthly, short-term, and long-term. Everything Josh just said. And three, strategies to pay off and achieve financial freedom faster. Sometimes that's investing the money in an asset account. Sometimes that is reducing the debt or accelerating the mortgage. And then everybody on this, guys, you need to have words. Like, Josh, this is a script. It's part of our black belt training. Mortgage strategies always beat rate, or always trump rate is the word that Josh always says. But he's got these small phrases. We're going to add another one to black belt training after today, how Josh transitions from the questions. But guys, you also need to have a value prop, a way that you are positioning yourself to the consumer. I'm not asking you to cut and paste this, but these are the components. My advice helps you build wealth faster by making smarter mortgage decisions. So that's the advice piece. And then I coach you over time to make sure you always have the best mortgage. And that's the home bot, the sales boomerang, the mortgage coach. So I just want to make this as instructional as possible for everyone. And then Josh, there is a punchline I want to make sure comes out of the story, but I'll let you, kind of go where you want to go with this. And then maybe you'll get the punchline that I want, and maybe I'll have to ask another question.
If not, just, punch it out there. The reason why what Dave said was so important is not so that you get another loan, or that Drake gets another loan, or that I get another loan. The reason is because Drake is making literally, in this particular situation, a multi-generational shift in this family's wealth. And when you do that for somebody, you do two things. Number one, how do you think Drake's confidence is go asking the next question, the next client, those uncomfortable questions? His confidence is super high because he just proved to himself how valuable his advice is. His advice is worth $4 million to that client. And the second thing is, when that client, and I'll let Drake, tell the rest of this story as it relates to the financial advisor story, but the next time the next time this family talks to anybody about getting a mortgage, he's created an evangelist. It's an evangelist, but it starts with creating deep impact with the families. Drake, let's wrap this up with the introduction to the financial advisor.
Yeah. So they reviewed the total cost analysis. Husband and wife came back and said, "Yeah, we want to do your option 4. We like the $4 million option." And so I said, "Okay, great. Well, do you have someone that can help you invest this, $5,000 a month in the next couple of years?" "Well, no, we don't." "Great. Well, we happen to work with a bunch of fantastic financial advisors, a lot of whom specialize in physicians. And so that was a spot for me to take the time to introduce them to a specialist that can help them invest that." So I made that connection, and I sent the financial advisor the analysis. And our intent when we started the transaction was, or when my intent was, just to go to 75% loan to value, because that got them the $90,000 that they needed out.
Yeah,
well, the financial advisor reviewed the total cost analysis and said, "Take as much as cash as you can, right? Go all the." So they came back and said, "Yeah, we want to go all the way to 80%. Fine, either way is fine with me, of course, but I didn't even. He took it one step farther, and he validated my advice, which was pretty cool. And yeah, just it validated to me and to the client, right?
Yeah.
Totally independently. So I think that was powerful for the client, and it was just fun for me.
I bet it was. Any feedback from the financial advisor as he looked at that total cost analysis? Did he give you any other feedback or kudos?
Not really. No, he was excited for a great new referral, right? So yeah, they're a strong referral partner.
Well, brother, they went from, I'll let you tie this down and wrap us up, Dave, but they went from indebted and no plan to a fast track to get out of debt and a plan to create wealth. And that is the brilliance of being brave, asking the hard questions, and then showing advice with Mortgage Coach. So kudos for you, man. I really appreciate you and all you do for our entire industry, to be honest, man. Thank you.
Yeah, no, I say that to both of you. Thanks, guys, for being amazing change agents in this industry. I am looking to do more interviews like this where it's a life-changing case study. So this is a case study on how a life was changed. I would love to see some on move-ups. So there's a lot of families out there that have equity in their homes that they could move up and they could take that equity and either reinvest it, or they could recast their payment, and they could either end up with a lot faster to their freedom point, like millions of dollars faster to their freedom point,
Yep.
or a better house with less payment if with all the equity that's been built up. So guys, what you heard right now was where we killed it for a family. Drake killed it for a family. He killed it for a CPA and financial planner. And so guys, your database is where the gold is. If you are a referral-based local mortgage professional and you can get to where Drake is, who cares about Amazon Mortgage? Who cares about Zillow Mortgage? Who cares about online lenders, big banks? You have a sustainable mortgage practice that will kill it in every single market. Who cares about price compression and lower interest rates? But you got to get to where we're at. So hopefully you got value from this. If you did, give it a like in social media. Share this with your mortgage friends, for anyone that manages or leads mortgage professionals. I think this warrants a sales meeting. Maybe you don't, I don't know how long we went, but more than a half hour. So maybe you don't play the whole thing. You figure out like, hey, what are the 5, 10, 15-minute segments? But do a sales meeting on this. So Josh, thanks for bringing this story to me. Appreciate you, brother.
Thanks for having us, Dave.
Drake, any closing thoughts for the audience? Just want to make sure you get to say anything you want to say before we wrap it.
I would just say, I think we talked about this a little bit on our last call, that the way I've been phrasing this to folks lately is, most people approach a mortgage as with the intent of, how do I pay the least amount in interest, right? That's what they know to how to evaluate a mortgage. But the question that they should be asking is, how do we get you to financial freedom the fastest? So that's what I approach every interaction with nowadays is, how do we get you to financial freedom the fastest? And how do I help you understand that?
I will drop the mic now, guys. That is the closing thought. I'm glad I asked that. And the party's over. Take care, everybody. Thank you for your time and your attention.
Thanks, everybody. Take care.
Guys.